Once again, I'm delighted to have Pietro Peligra, who's the chairman of Portobello, with me to talk about the recent results and the outlook for the coming year. Hello, Pietro.
Hello.
So let's start off with, we last spoke in September on the publication of your interim results. So could you just give an update on how the company closed out 2022, please?
Sure. 2022 has been a great year for us. I mean, we've been increasing both revenues and EBITDA by slightly less than 50%. So big growth compared to 2021. Growth due to the, let's say, growing in general of the business and the opening of new stores. We opened about 12,000 square meters, between 10 and 12,000 square meters, roughly speaking, in of commercial surface during 2022. So it's been a great year, and I can say that the last 2 years has been great. The last 2 years, 2021, 2022, which have been the pandemic year, the company doubled both revenues and EBITDA, moving from 66 to more than 130 million in revenues, and from 11 million in EBITDA to 24.5 million in EBITDA in 2022. So this is a sign that our business model is very resilient, because during the last 2 years, which has been terrible years because of the pandemic, but also because of many other macroeconomic situations that affected many industries and many consumers, we've been growing very fast, both organically and through the opening of enlargement, let's say, of our retail network. The forecast for 2023 is still to grow, to keep growing, and so far the year, I must say, has been going as expected. We open up 5 new stores. The 5th is going to be open in 4 already open. The 5th is going to be open in a week or so, and the new openings are going pretty well. This thanks to the fact that the people are now more accustomed to Portobello business model, purchasing experience. They are more aware of the brand, and we are also increasing the loyalty thanks to the loyalty program we launched in the second half of 2022.
That's good. And second question, working capital is always a focus with retail-based companies. Could you just give some an update on what happened to working capital through the end of 2022?
As you may see, working capital increased, but we always must make a distinction, because our procurement model is it's a little more complex than a classic retailer. We have the classic procurement made in cash, so we buy items in cash and then we sell through our retail network. But at the same time, we have the procurement in barter. So we basically don't have any cash out, because we buy and we pay the items that we procure, that we buy in media spaces. Okay. Of course, from the accounting perspective, both of these procurement methods are accounted as inventory, for example, but they are not the same, since in the first case there is a real cash out, so there is a real risk for us, because of course we paid with real cash the items that we must then sell to the end consumer. In the second case, the risk is very low, because we actually didn't pay in cash. We paid with unsold advertising spaces that for us have a very low marginal cost. So for this reason, the risk for us is very low, and the profit margin as a consequence is very high. So in terms of working capital, the working capital increased during 2022 for a very simple reason. We almost doubled the commercial surface of our retail network. Okay, so by definition it increased, but the barter part of this working capital has increased more than proportionally, thus reducing the risk of the inventory that we carry. So as a final consequence, what we have been seeing during 2022, and will be more and more visible in 2023, is a fine-tuning of the business model, where the working capital requirements, despite the fact that it will grow during the as the company will grow, as the number of stores will increase, will become less and less risky for the company, because more and more sourcing will be made through barter, even directly with the suppliers. So for this reason, the dynamic of the working capital now is becoming a little bit more tied to the let's say core business of Portobello, which is a retailer which has been able to engineer a supply chain where about half of the procurement is made in barter.
Great, thank you. And my next question is with respect to space opening in the retail format. I think you ended 2022 with slightly less space than anticipated. I mean, there's obviously good growth continuing into the current year. Could you talk about why the space in 2022 was slightly lower than probably anticipated, and also has the environment made you think about your medium-term growth rollout of the stores?
I mean, Portobello is a very opportunistic company, so of course we must follow the trend and seize the opportunities. During the last few years, we have seen basically three, let's say, macro trends. On one side, a very low cost of debt. On the other side, easiness of raising capital on financial markets, equity capital on financial markets. At the same time, a very clear market opportunity in growing the number of stores and reaching to as many customers as we could. The first two let's say elements have changed dramatically during the last, let's say, 12 months, more or less, in terms of worsening of the financial markets. So now it's very difficult to do capital increases. At the same time, the cost of debt has raised dramatically and is still growing. The third element is still there. So a very interesting market opportunity in terms of lower cost of renting space, renting new spaces, new commercial spaces, and at the same time, the demand from the end consumer to buy branded products, mass consumer branded products at low, cheap prices. So for this reason, we've been slowing a little bit our growth since the cost of capital has increased very much. And now the goal is more on trying to fine-tuning more the supply chain, the business model, in order to focus more on cash generation, in order to have the financial resources to keep growing. So far, we've been mostly focusing on external financing, of course, because we were small and we need external financing to grow at the speed at which we grew during the last few years. Now, since we reach a certain size, by the end of the year, we're going to have more than 30,000 square meters, plus we have a very strong online e-commerce. Now we reach a scale for which now we can finally focus on cash generation and the optimization of the entire working capital management, which means improve the product offering within the stores, improving the relationship with our suppliers in terms of better payment condition, more discounts, rebates, and so on. This will have a direct focus, a direct impact on the value proposition, on margins, and on costs. And of course, this will help us to generate the cash that we need in order to open new stores. So during the last phase, during the last months of 2022, and also during 2023, we decided to reduce growth in order to focus more on cash generation and working capital optimization. Since at the end of the day, the cost of capital was higher, and also we reach a scale at which we can now finally focus on these aspects rather than keep growing indefinitely.
And when we last spoke in September too, obviously the economic downturn was well under the way more broadly, and you talked about potential positives to Portobello in terms of being able to get hold of goods and advertising inventory at better rates. So could you just talk about what's happened since then, and have there been more positives, more negatives?
Sure. The situation got worse since we last spoke because at the end of the day, the dynamics that we encountered during 2022 are still there and are even worse. Pandemic, of course, now it's almost done, but the war is still there. But above all, inflation now is really affecting people purchasing power. So what we are seeing is that in most of consumer goods sectors outside of foods, we are seeing a decline in customer consumptions, and this is good news for us, because at the end of the day, people are becoming more price sensitive, of course, because their purchasing power has decreased, and so for this reason they are more inclined to be selective on the items they buy and the price they pay. Since our value proposition is on mass consumer products at lower price than any competitors, of course, our value proposition is becoming very, very successful. Also because 95% of the items that we sell are primary products, so products for cooking, products for cleaning, household products, okay? So there are products that every household, every person is obliged to buy. This on one side make us value proposition very, very valuable for the end consumer. On the same side, of course, on the other side, there is another opportunity. The other opportunity is that the weakness of our competitors is creating the possibility to gain more easily market attention, consumer attention, to open up new stores. Rental prices are still quite low, and at the same time to find good chances of doing barter deals, because at the end of the day, lower consumption means that many companies, which can be brands, could be distributors, could be retailers, have encountered, let's say, less interest by the end consumer, which means lower sales. Lower sales mean higher inventory. Higher inventory means the need of getting rid of unsold products, and so for this reason, they are more inclined into barter. So overall, the worsening of the market environment, given this macroeconomic condition, where the most important aspect is inflation, is creating for us a unique opportunity, and we are exploiting this market opportunity thanks to the lever of price, which now is probably the most important marketing lever among the four classic levers, which are products, price, place, and promotion. Now, price is what really moves the consumer.
And finally, it's pretty much 12 months since you announced the acquisition of the ePrice joint venture. Could you just, there's obviously a lot going on in this year of, just the first year of ownership. So could you tell us what's going on behind the scenes and what we should probably look for in the next 6 to 12 months from ePrice?
Sure. ePrice has been a key acquisition for us because it's giving us the opportunity to basically scale our business model very quickly with a national presence, but at the same time, it's what is giving us the possibility of increase our weight, our negotiating power with suppliers. So what has happened during the last few months is we acquired the assets in July of last year. We've been restructuring the company during the first months of the management. We've been able to reduce operation costs and the burn rate by about 70%, with the goal of breaking even by the end of the year. We restart direct sales because most of the activities was related to the marketplace. And by the end of 2022, beginning of 2023, we restarted also the direct sales business. We open up direct accounts with most of the major brands in electronics, and this is giving us an edge because it allows us not only to have direct sales, but have direct sales with very, very interesting prices. And we are starting now to develop the omnichannel synergies with Portobello. Omnichannel synergy in terms of pick and pay, in terms of loyalty program, in terms of the sharing the customer database. But above all, as I was mentioning, is giving us more negotiating power to our suppliers, because we are not only now a retailer, a physical retail chain, but we are now an omni-channel operator with a very important, because ePrice is still one of the major Italian e-commerce platform. So we are now a national relevant omni-channel company. And this is creating lots of interest by many suppliers, and the benefits are not only for ePrice but also for Portobello, because of course the improved condition in terms of price, in terms of rebates, in terms of discount, and so on, goes both on the physical stores and on the online.
Pietro, that's great. Thank you for your time today, and we look forward to catching up soon.
Thank you.